another interest rate rise. So we've recently had one from a 0.1% cash rate to 0.35, up 0.25%. And as of the start of June, the Reserve Bank of Australia has again raised it. It's gone up another 0.5%, making it 0.85%. And interestingly enough, they're suggesting that there's more to come. And Westpac has already announced that they're going to pass this straight on to their consumers, which means that if you've got a $500,000 mortgage, you're going to be paying an extra $200 a month. The economy is actually still trying to fight off this inflation. What is going on?
I must say I've been watching it really, really intently because it has a massive effect on businesses, on wealth creation, and then also just like general households.
Heaps.
Yeah, so it's dominating the news as well. So I've discussed this in one of our recent emails as well and newsletters about the roles interest rates actually fulfill within our economy. But the thing I will just come back to here is that the Reserve Bank has a very real challenge on its hand. So the cost of living and inflation is going through the roof due to a whole bunch of factors. And then they've also got all this stimulus in the economy that's working its way through, and this spiral is getting out of control.
Huge.
It really is.
Yep.
So what happens when inflation gets out of control is the lever they like to pull, or when they perceive inflation is going out of control, is they raise interest rates to destroy demand. That's what the whole purpose of raising interest rates is. It's not that interest rates solve the issues overseas or solve supply chain challenges. What it actually does is make us spend less. So, for example, if you've got a mortgage and interest rates go up, you're now paying for that mortgage instead of maybe going out for dinner.
Yep.
So it's a behavioural change that's really, really noticed an impact. The thing I'm really surprised by here is just how quickly they've done this and how on the front foot of communicating that there's more to come. Okay, so I don't have a mortgage on my own home. So I don't necessarily feel like interest rates don't affect my personal mortgage, where I realize everyone else will have that. But I do have more than $4 million debt on investment properties, and a 0.5 interest rate increase is be over 20 grand a year now that I have to come up with. And that did jar me, as I said. So emotionally I felt this, even though logically I've made moves I'm quite happy with. Yep. So I definitely felt it on a personal level from there. But the interesting thing is, in the communication, this is the one where it's really made me kind of think about it. So the rate rise has come and I've emotionally been hit. The second thing is I just keep seeing doom and gloom stuff. It doesn't matter if I'm on YouTube or on the news or the ads. It's I see the economy's over, all this. So the news cycle is pushing negativity at me, rightly or wrongly.
Yep.
But thirdly, I've actually had several business owners that I work with regularly. They're actually becoming defensive. So I'm wow, this is all really happening around me. And these are the things where bringing it back to business owners here is that if this rate rise causes business owners to delay their growth plans, delay hiring, suddenly they don't have as many people coming into their businesses, I think we could see a bit of an impact here. I really do.
But do you think that is a knee-jerk reaction? Because I always look at things, right? So when I see a news article that's bam, 0.5% increase in interest rates and the banks are passing this off, and I'll always have that knee-jerk of going, man, I hate that. That's terrible. And then when the logic kicks in of going, okay, well, that probably means that my rental income for the property is going to go up. The value of my properties are going to go up. And great, over a period of time, it's probably not going to be that bad. It's going to be absorbed anyway. Do you see a lot of people that you're talking to sort of absorbing that, for the business owners after they go through that initial knee-jerk reaction?
I would like to think they are, but I don't think that's the case. Yeah. I think there's a lot of emotional reaction. I think the quick rate rise and the way the news cycle is working, I think we actually have behavioural change. I think the RBA is getting their intended result. I think we're going to see demand destruction.
And it's interesting because the second question I'm going to put on the back of that is, you were mentioning how people are now sort of delaying growth plans, delaying recruitment, delaying all of these things. Do you think that that's just a short term? Do you think after 2 months, 3 months, or when the RBA either stops increasing rate rises or otherwise, that's when they build their confidence? Or do you think it's just a knee-jerk reaction, and when they stop and think, they go, okay, you know what, I can employ somebody else, I can go for a bit of growth, etc.?
Depends on what they do next, right? Yeah. So let's say the RBA doesn't do any more, the next meeting comes and they don't do any more raises or anything like that. It's like, maybe we brush this off and go back to business as usual. But if next month comes around and they do another raise and another and another, and like they keep going in the way they're suggesting, I think that there's a very real chance they push the economy into a recession.
Do you think that's what's going to happen?
Yes.
Yeah. You and I are very similar. And it's interesting because I know you and I talk about this a lot around, well, how would I play this? Like if I was a business owner right now, we've mentioned this quite a few different times, right? I'm going to be looking at how can I rely less on wages? Like how can I change my business model or adjust how I deliver what I deliver or do whatever I do in order to sort of decrease that necessary labor that I have. And we talked about that great example of the dental practice that had the person in the Philippines on a computer up on the desk, right?
Yeah, which was awesome.
Which was great. The other one is, which I thought was quite interesting, is relying less on rents. So if you're a face-to-face business, do you need the same size place that you're in currently? Are you coming up for a new lease? Can you move? Can you negotiate? Can you do all of these things? But from your business model, how can you potentially be less reliant on that sort of expenditure, if you will, in your business? But also one other point that I just literally finished up a board meeting where we're talking about how can we actually decrease any loans on the business. And so we're actually looking at converting loans that people have put into the business into equity as a way to decrease this debt on the business without sort of having a bigger impact, because we know that this is going to go through quite a little bit more of a change, right? The interest rates will probably go up. A recession might hit. So trying to get that debt off the balance sheet is really important for us. And the way that we're looking at trying to potentially do this is converting debt into equity as just a creative way.
See, you lied. You absolutely lied. You're now a liar on this podcast. You said it hadn't changed any behaviors for you.
for me personally, like my day-to-day, I'm still going to get my takeaway latte. I'm still going to do all that kind of fun stuff. However, in the businesses that I operate with, it is just being attacked a slightly different way.
Yeah, but think about this at scale, right? That's just another business, right? I do wonder how many businesses are all out there doing similar things right now. Like how much demand destruction has been created here. So I just want to articulate a point because I don't want people to think I'm doom and glooming and there's a recession coming and all the rest of it. I don't actually think that at all. Well, I do kind of, but I'll explain this. What I think is going to happen is globally, they're going to put rates up and the Fed's going to raise things and we're going to have a bumpy period.
Yep.
I ultimately think they're going to go too far and then change their tune. I don't know when this is going to happen. I don't know what the signals of that will be, but I suspect what's going to happen as rates rise and they destroy demand in the economy, they're going to slow it down too much and then they're going to go back to cutting rates. So I don't see this as a long-term thing we're going to have to deal with. I actually see this as a short-term window. Now, what I think is important here for business owners to understand is the idea that you've got to be set up and have enough buffers and your risk at the right level to make it through these times. Yep. Like you've got to have things in place to do that. And the ones that don't, it really, really concerns me. Yep. How much to yourself is like when these short-term things, I'm going to call them short to medium, come up, it's actually the opportunity. So suddenly things that, if the property market cools, that might be your time to buy property. Or like we know and again, this is not financial advice, but the share market's copped a beating in these rate rises.
Yep.
This might be the opportunity to buy shares if you're paying attention or if you understand that world or whatever it is. So I think it's going to be really interesting. What I would love to voice as the important thing here is being positioned well. Like you always want to make sure you're positioned well. Like, and I love this quote, how you run your business in the good times will be shown in the bad times.
Yep. What is it? You can see who's not wearing bathers when the tide goes out.
Yeah, and the tide's going out a little bit. I mean, it might come back in, but I think we're going to see who's exposed at the moment.
That's exactly right. And I love that point because having the cash reserves to go and sort of pounce on these opportunities is critical. You know what's interesting? I was thinking about this like literally yesterday. I'm like, there might not actually be these unique opportunities that show themselves. However, at least I'm positioned if I necessarily want to jump on something. Right, to your point, like this might be the sort of the case in point for the next couple of months. Like, cool, the RBA might continue increasing interest rates, and then some opportunities may or may not show themselves, and it might go back to normality. Am I going to be upset? No. Am I going to be stressed? No, because I was aware of what's coming. And so having cash reserves just in general for these types of things, I think is just such a great sort of point for wealth creation. And sort of just bringing it back to sort of the business owners as well. I'm going to ask you a question. Do you think that business owners should prepare for less demand on their products unless it's like a necessary? Like obviously electricity is like a necessary, but I doubt too many people have their own power plant and renewable energy plant and stuff like that. But with like an economy potentially going through a recession, the spending is going to decrease. Everyone's going to sort of just batten down the hatches. Do you think that business owners should like prepare for that?
Yeah, so this is my views on this. I think business owners who haven't been paying attention to their margin or have been relying on a continuous cycle of growth to make things work, they're going to see some pain and potentially some wipeouts. I think the business owners that have been diligent with their risk and also had buffers in place, like you're actually going to absorb and potentially actually benefit from other players who have taken on too much risk out of the market. So I think that's a very real thing that's going to happen. And as part of the cycle, right, it does happen. I think the same is going to be true on the investing side as well. Investors that have taken on way too much debt or constantly like thinking that things can never slow down is like as these, can you imagine being like 100% loans right now?
Yeah, 95% loans, like.
Yeah, like you are going to be feeling real pain right now as these rate rises come through, and like that's going to potentially have you sell in an environment where you don't want to be selling. Right, so they're the ones that I think are going to be particularly hit by this. I actually like, again, coming in as the optimist, is like this should be the time when you're like, great, these poorly run businesses that don't have the margin, who have been too aggressively like bloating their staff, haven't been diligent with how they run their books or having reserves in place. Like this is my time to actually take market share from them.
Yep.
So that's how I'm thinking about it. What about you?
Yeah, very similar. I kept going back to like debt. Like a lot of people went and took debt over the pandemic period, or to sort of ramp themselves up after the pandemic sort of came in to say, hey, now everyone's back to normality. How do I go and ramp up? Especially sort of face-to-face physical places. And so to mimic everything you've said, I completely agree. The final point that I'll just add on to the back is like that loans, like that, whether it's a business loan, a credit card loan, a PAYG loan, or whatever you have taken, just note that that's going to really impact you from interest rate increases, but also from the liability that you need to keep paying that off every single month, right? So as demand for your products decreases, obviously revenue will potentially decrease at the same time, and the cost of your debt will continue to rise. Like it's just really quite challenging, and that's applicable to business as well as personal wealth. But it always comes back to the business fundamentals, right? If you're profitable and you provide something that everybody needs and wants, you're going to weather the storm quite well.
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.